If you think your 401k is going to take care of you, you might be making the biggest financial mistake of your life. And the worst part, you won't even realize it until it's too late. Because right now, millions of people are doing exactly what they were told, saving consistently, trusting the system, following the rules, and quietly, they're falling behind, not a little behind. I'm talking about a gap so big, it can destroy your retirement. Here's the uncomfortable truth nobody wants to say out loud. The system you're trusting was designed for a completely different era, and that era is gone. Now, before you brush this off, I want you to think about something. If everything was working perfectly, why are so many people nearing retirement still stressed about money? Why are people with decades of saving still unsure if they can stop working? That's not bad luck. That's a flawed strategy. And once you see it, you can't unsee it. Let me show you exactly where this breaks. A 401k is not some magical wealth building machine. It's just a container. Inside that container, mostly mutual funds, packed with fees, tied directly to market performance. So your future depends on three things you don't control: the market, interest rates, and timing. That's it. Now here's where it gets dangerous. For decades, people relied on one simple formula: 60% stocks, 40% bonds, safe, balanced, reliable, except it's not anymore. Because when interest rates changed, everything changed. Bonds stopped doing their job, stocks became more volatile, and suddenly both started falling at the same time. That's not supposed to happen, but it did, and it exposed something most people missed. You're not diversified. You're concentrated in risk you don't understand. Let that sink in for a second. Now here's where it really hits. Let's say you did everything right. You saved your whole life. You built your 401k up to $250,000. Sounds decent, right? Decent? Now take 4% out annually, the so-called safe withdrawal rate. That gives you $10,000 a year. That's about $833 a month. Pause for a second. Can you live on that? Rent, food, bills, medical? That's not retirement. That's survival. And that's assuming everything goes perfectly, but things don't go perfectly. Inflation eats into your returns. Fees quietly chip away at your balance. Markets fluctuate, sometimes violently. So even when you think you're moving forward, you're standing still, or worse, going backward. And here's the part nobody tells you. The system doesn't break, it just underdelivers quietly. So you don't panic, you just keep contributing, hoping it works out. That's the trap. Now layer something else on top. A massive wave of retirees, all needing to withdraw money at the same time. Think about what that means. More sellers than buyers, more people cashing out than putting money in. That creates pressure, downward pressure, on the exact assets you're depending on. And it won't happen overnight. It'll happen slowly, then suddenly. That's how these things always play out. So the real question becomes, what do you do about it? Because sitting still is not a strategy. Hope is not a strategy. You need a different approach, a smarter one built around a simple idea: cash flow, not speculation, not hoping prices go up. Cash coming in consistently. That's how real portfolios are built. So let's break this down. First, you need assets that pay you no matter what the market is doing. I'm talking about businesses that generate profit and share it with you. Dividend-paying companies, not hype stocks, not trends, real companies, the kind that have been paying shareholders for decades. Here's why that matters. When you own something that pays you regularly, you're no longer dependent on selling it. You're getting paid to hold it, even when prices drop. Even when the market is uncertain, you still get paid. That changes everything. Now imagine this. You own $100,000 worth of assets paying 4%. That's $4,000 a year. The market drops 20%. Your income still coming in. That's stability. That's control. And control is what most investors are missing. But income alone isn't enough. You also need protection, because inflation doesn't stop. It keeps moving quietly, constantly. So you need assets that move with it. Real assets, things with tangible value, real estate, infrastructure, essential systems people rely on every day. Because when costs rise, these assets adjust, rents increase, usage fees increase, revenue increases, and that flows back to you. Now here's where it gets interesting. Most people think you need millions to access this. You don't. There are structures that let you participate without owning physical property, which means you can start small in scale. But here's where most people stop. They think that's enough. It's not. Because there's another level most people never reach: ownership beyond the public market, private businesses. This is where serious wealth is built, because you're not buying after the growth. You're part of the growth. You're getting in earlier. And when things go right, the upside is not 10%, it's multiples. But there's a catch. You need patience, and you need to choose carefully. Because in this space, who you trust matters more than what you buy. Now let's go one step further, because this is where everything shifts. Owning your own income stream, your own business, even a small one. Because when you own something that generates money, you're no longer reacting to the market, you're creating value. And that changes your entire position. You go from passive participant to active controller. Now I'm not saying quit your job tomorrow. That's reckless. But building something on the side, that's leverage. That's optionality. That's how you start separating yourself from the system. And finally, the most misunderstood asset of all: cash. Most people think cash is lazy. It's not. Cash is power. Cash is patience. Cash is the ability to act when everyone else is stuck. Because when markets fall, opportunities appear, but only for people who are ready. Everyone else, they panic, they sell, they freeze. But the ones with cash, they move. They buy quality at discounts. They set themselves up for the next cycle. That's how the game is really played. So now think about your position. Are you fully exposed, fully dependent on one system? Or are you diversified across income, protection, growth, and control? Because that's the difference. Not luck, not timing, structure. The right structure wins over time, every time. Now here's the part most people ignore. Knowing all this means nothing if you don't act. Because information without execution is just entertainment, and most people stay stuck there. They watch, they agree, they do nothing. And 5 years later, same situation, same stress, same uncertainty. You don't want that. So here's what you do. You start small, but you start now. You build one income stream, then another. You create balance, you create flexibility, and most importantly, you create control. Because at the end of the day, the goal isn't to have the biggest portfolio. The goal is simple: cash flow that supports your life, freedom from dependency, and the confidence that no matter what happens, you're positioned to win. The clock is ticking whether you act or not. So the only real question is, are you going to stay in the system or build your way out of it?